Welcome. In this video, will Zbcn coin price go up? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart carefully, it is possible to say that the price movements have taken on a rather meaningful and promising structure. In particular, the long-standing upward trend provides a very important reference point in terms of determining the overall direction of the market. In this context, the rising trend line formed by the price has become one of the key support zones that investors place great importance on from a technical analysis perspective. This line has been tested numerous times in the past, and each time it has triggered a strong upward reaction from the price. Currently, the price has once again touched this rising trend line, and the reaction it receives from this level will play a critical role in determining the direction of the upcoming period. First of all, it should be noted that every touch of a rising trend line is considered a window of opportunity in technical analysis. This is because such lines often represent areas where buyers might re-enter the market, where risk is relatively lower, and where potential returns are higher. The current price action points exactly to such a scenario. The price has once again reached the long-observed rising trend line. This touch represents a very significant area where buy-side strategies can be considered. If a bullish reaction emerges from this region, it would not only restore technical confidence, but also pave the way for the market to gain upward momentum. Moreover, the structural movements exhibited by the price up until this point have also been quite positive. The peaks and troughs formed during previous uptrends have repeatedly confirmed this trend line, clearly establishing that it is not just an ordinary slope, but rather a dynamic and strong support area. This support serves as an important threshold not only in terms of price but also psychologically. Maintaining this trend helps sustain investor confidence and encourages new waves of buying. The fact that the price has currently reached this trend line significantly increases the likelihood of a similar scenario playing out as in the past. Structures like this, frequently seen in technical analysis, tend to work the same way in the future as they did in the past. If the price has reacted strongly upward each time it touched this trend line before, a similar bounce can be expected now as well. While technical analysis never guarantees 100% certainty, the current setup is producing very strong signals, and thus, adopting a positive outlook is entirely reasonable. Additionally, this rising trend line offers significant insights not only in terms of price, but also in terms of time. If the price touches this line periodically and forms higher highs after each touch, it enhances both the stability and the quality of the trend. Similarly, the current contact with the line may serve this scenario. If the price consolidates here for a while and then responds with a strong upward move, this trend line will once again be validated, sending a clear signal of the trend's continued strength. Currently, the pause and sideways movement of the price along this line could be an early sign of an upward breakout. In technical analysis, compressions around support zones often result in sudden and strong moves. This means the price is at a decision point, and such decisions tend to occur in the direction of the prevailing trend. In this context, the respect the price is showing to this trend line increases the likelihood of an upward bounce and provides strong indications that the market may move positively in the short term. Considering all this data, the fact that the price is currently touching the rising trend line can be interpreted as a highly positive development. This contact means that a previously confirmed structure in technical analysis is being tested once again, and it also presents an attractive opportunity for investors to re-enter the market. But we can't make decisions based solely on trend lines, so let's take a look at other metrics as well. Stay tuned. In the detailed technical analysis conducted on the chart, a significant formation that frequently draws investors' attention and has yielded successful results many times in the past is clearly evident: the W pattern. This pattern, also known as a double bottom, typically forms after a strong downtrend and is recognized for signaling a potential reversal. Looking at the current price movements, the W formation has emerged quite clearly. As is characteristic of this pattern, the price first makes a downward move, then experiences a reactionary rise, followed by another pullback to a similar level, forming a second bottom. This second bottom is usually close to the first one, and from this level, the price often receives support and makes a strong upward move. At this moment, the price is positioned right at the second bottom of the W pattern. This second bottom region is considered a highly critical support level in technical analysis. This is because it represents an area where buyers are likely to step in and where the probability of the pattern beginning to play out is the strongest. A positive reaction from this level could signal not only a short-term upward movement, but also the potential reversal of the broader trend. Especially if investors have confidence in the structure of this pattern and heavy buying emerges from the second bottom, it sets the stage for the completion of the pattern and the beginning of a rally toward target zones. At this point, the target of a W pattern is typically calculated by adding the distance between the two peaks to the breakout point. So, if the price starts to move up from the second bottom and breaks through the peak level, referred to as the neckline, then the potential target area would indicate a significant upward move. One of the best aspects of this type of formation is that it provides investors with both clear entry and exit points. Examining the current setup, it can be observed that the price is consolidating around the second bottom. This consolidation often signals an accumulation phase, meaning that strong hands may be gradually building positions, and the market is gathering strength to determine its next direction. Moreover, the price behavior at this stage of the formation is also giving quite positive signals. After the pullback, selling pressure appears to have weakened, and a saturation point in volume at the lower levels can be observed. This indicates that the likelihood of a downward continuation has diminished and the probability of an upward reversal has increased. Investor psychology in such bottom areas is typically indecisive, but the clear formation of technical patterns helps encourage more confident buying decisions. The current situation reflects this, and the second bottom of the W formation stands out as an attractive support zone for investors. An upward move from the second bottom could result in a movement toward the neckline of the pattern. If the price reaches this neckline level and encounters sufficient buying strength to break it with high volume, the W pattern would be fully confirmed, changing the overall market perception. From that point on, investors begin to accept that the downtrend has ended and the market has shifted direction, which in turn helps the upward movement gain momentum. Such a scenario could lead to the pattern's target being reached in a much shorter time frame. In addition, after the completion of such reversal formations, not only is the target reached, but the beginning of a larger and more sustainable trend can also be triggered. In other words, the W pattern does not merely produce a short-term reaction rally, it can also pave the way for a consistent upward movement in the medium to long term. The RSI, which is frequently used in technical analysis and provides traders with important signals about direction, has been under the influence of a downtrend structure that can be clearly observed on the chart for some time. This downtrend has caused the RSI to be stuck at lower levels for a certain period of time, limiting upside attacks and creating an outlook where buying power is suppressed. However, looking at recent developments, this picture seems to have started to change. In the RSI indicator, it is clearly observed that this downtrend, which is considered very important in technical terms, has broken upwards. This breakout is more than just an indicator move. It is a very positive and promising clue about the potential future movement of the price. This breakout on the RSI usually signals a change in market psychology. In other words, buyers are now more willing and stronger, and sellers' strength has weakened, especially when the RSI, which has been moving under a falling trend line for a long time, breaks this structure. It shows that the market is gaining momentum, and the first signals of a possible uptrend may be given. As a result, when the RSI breaks the downtrend, the price may move. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.